The stock market crashes on open. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. I have my morning stein of coffee and I thought we'd have a look at this article from news.com prepared by James Hall discussing, well, the sharp drop, the crash in the stock market this morning when it opened, 7% down. Before we go through this, we'll jump over to trading economics. We can see here, there you go, guys. Just think, this is the ASX 200 index. If you'd bought into it in December last year, 31st of December, and you'd have been feeling good, you would have got in at, 6, 7, going up to 7,100, thinking, yeah, I'm the bee's knees. Know what I'm doing, I'm a master. And boom, it's down. It's down. We can see here, this is an intervention. This is an intervention. Boom, boom, boom. The RBA increases repo, stocks shoot up. Confidence spikes, stocks shoot up. But it keeps going down. It keeps going down. We zoom out. Let's have a look to the 25-year chart. There you go. There's the GFC. How's this look, everyone? We had the Federal Reserve in the US cut their interest rates to essentially zero, 100 basis points. We did a video about it this morning. New Zealand went down 75 basis points. Our cash rate is at 0.5. Can they cut any further? Will we reach negative interest rates, everyone? What will this all do? What will this all do to consumer confidence? You've got the fears of this illness. People are self-isolating. People aren't going to work. Are they going to spend that money they receive from the government to help stimulate the economy? Or are they going to try and buy gold or silver online? Let me know your thoughts and opinions in the comments below, guys. Well, let's have a look at this article here. So the stock market plunges more than 7% at open of trade. After $232 billion was wiped from local stocks last week, volatility is expected to continue as illness fears further travel restrictions. The Australian share market plunged more than 7% lower at the start of trade, wiping out the gains from the end of last week. Well, there you go. There you go. Investors were wincing ahead of a totally wild trading week as increasingly tight travel restrictions in response to the spread of the illness shut down major economies and crippled supply chains. Despite the gloomy conditions, the ASX was tipped to rise at the open, but the Federal Reserve's aggressive decision to slash rates to zero sucked confidence out of investors both here and abroad. The major lenders were particularly hard hit, with Commonwealth Bank, NAB and ANZ down between 7.3% and 6.3%, while biotech market darling CSL shed 9%, and Cochlear was up to 16.4% weaker. There you go. Look at those movements, guys. This is not a sensible market right now. There's a lot of fear, a lot of emotion going on. It's all a bit crazy. Analysts say global stocks will continue to be at the mercy of the deadly illness this week as case numbers rise, and Scott Morrison announced all international travel will be forced to self-isolate this morning. So Australia is instigating self-isolation to try and reduce the impact of this, which it's a numbers game, guys. It comes down to our hospital capacities, and that's the problem. The situation in global markets currently is totally wild, IG market analyst Carl Roeder said in a note this morning. The core issue is the illness, of course. But at the stage the crisis is in now, for the markets, everything centers on the place in the world is grinding to an economic halt, and what emergency measures policymakers are taking to try and support economies through the turmoil. Now, here's the thing, guys. What can they do? What can they do? They can cut the cash rate. They can increase their repo purchasing, which is essentially more borrowing, and that increases the money supply. They can do QE, which is another increase in the money supply. So you've got to be concerned that that's going to have an eventual impact on people's confidence in the money that they're using. Are we looking at a potential for hyperinflation? Are we immune to the mistakes of the past? What are the fundamental differences? Someone let me know. I was talking to a viewer on chat this morning, and he's thinking eventually we're going to go to a gold-based digital currency, gold-based crypto. I could see something like that emerging. I think if people lose confidence, they'll want something tied to something of value. We'll have to see, guys. We will have to see. Signs of stress on the financial system remain as conspicuous as they've been since the GFC, and by extension, volatility remained very high. Mr. Rota said the increased volatility would lead to erratic movements both higher and lower, as illustrated by Friday's session. Traders were left speechless when the ASX closed more than 4% higher on the last day of the week, slumping as low as 8% during the day, a swing of more than 12%. From a fundamental economic point of view, the top concern right now is a US recession, Mr. Rota said. The market seemed to welcome the Trump administration's new package to combat the risk. It declared the illness outbreak a national emergency and promised a range of measures, including freezing interest rates on student debt and providing free tests, he said. I'm surprised the test wouldn't be free otherwise, but I guess that's the US, isn't it? The market has now lost $529 billion since its all-time high reached just 3 weeks ago on February 20. This seems to be that we are repeating history, isn't it? I've got a bit of work I've got to get into today, my real work. I'm an architect, not just a YouTuber. And I'll try and cobble something together looking at the Great Depression. Because I suggest have a look at it, read it, and look at how the markets changed over time. It wasn't just boom overnight. It was boom overnight, boom, back up, down, then a slow decline over a period. Is this what we're seeing, guys? This feels like a continuation of the GFC. Yeah, Australia got lucky, everyone. We got lucky. And the price we paid for that deal of the devil is our housing just inflated. We had foreign investment shoot up, and housing costs, guys. Housing costs. Well, affordability is ludicrous. And prices just shot up. And of course, wages, well, they haven't grown at all. Because why would you invest in a business? Why would you take the risk? Why would you have to deal with superannuation, legislation, government changing the rules every bloody month? Dealing with annoying people. Having to go through a bullshit process to fire someone who's useless. And if you haven't gone through that, you honestly, I think you shouldn't have a say on employment if you haven't had to fire someone who's useless. Really, it's not a pleasant thing to do. And it's hard. You've got to jump through so many hoops. Because, of course, as a boss, you're the parent in that relationship. It feels like it sometimes. So, both the United States and New Zealand central banks aggressively cut interest rates to 0 and 0.25% as part of a global trend to prepare for the financial crisis spurred by the pandemic. But who is going to go out now and borrow? Is anyone going to be confident enough to take on debt? I'm sure some people would. What are they going to do with it? What are they going to do with it? The Aussie dollar is swinging in a 2% range based on the levers being pulled by policymakers across the planet. Because remember, we're seen as a proxy for the Chinese economy. I'm just looking over at the Aussie dollar right now. You can see here we're at 61.2 US cents, and that's a slight decline from when I was looking at it this morning. Let's look at the stocks. Where are we sitting? There you go, 52.58. We'll go into the 15-minute one. Yeah. It weakened when the RBNZ cut its rates and strengthened when the Federal Reserve did the same. At 8 a.m. Sydney time, the Aussie was buying 61.4 cents. At 10:15 Australian Eastern Standard Time, it was down from 62.98 cents as the market closed on Friday. Well, yeah, and it's sitting down right now. So there you have it, guys. The market lost all the gains it made the other day. This is just incredibly volatile at the moment. Definitely something to keep an eye on. We'll have to see. Gold and silver. Gold took a bit of a jump. We'll have a look here. Gold was at 1532. Silver, it's not doing as well. There you go. It's 1458, and people keep discussing the traditional relationship between gold and silver. Is that still relevant anymore? Is that still relevant? I think more cultures have a consideration of gold as a safe haven. But do people still think of silver as a safe haven? We'll have to see. Or is it just manipulation? I mean, these tend to drop off very quickly before a big climb. Let me know your thoughts and opinions in the comments below, guys. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan, there are many ways you can support us. You can share the content and help the channel grow. You can use our affiliate links at Amazon and eBay for your consumer purchases, or you can join the channel on YouTube or on Patreon for a small monthly fee. You can also use our affiliate links at Independent Reserve or KuCoin for the crypto traders out there. You can buy our merch from the Heiser Says website, or you can use PayPal if you want to support us that way. I'll also soon have a Gold Pass donation if anyone wants to donate gold. So guys, take care, and I'll see you next time. Bye for now.